Hey, what's going on, everybody? Just wanted to pop in here. 3-day chart. We have a 9 buy on the 3-day chart. That doesn't mean it's going to reverse instantly. It's just telling you, hey, the price came down in an orderly fashion from all the way up here. Red candle after red candle. Nice orderly fashion. We landed here on a 7, an 8, and now we have a 9. It's not a perfected 9. I would have liked to see the 9 where the 7 is, and that would have been more perfected. But you can kind of see the 7 was the more exhausted candle here, and then the 8 was sort of the retracement of that exhausted candle, and then you have the 9, which is more consolidating in this sort of range in here. So like I said, it's not too perfected, but it looks pretty dang good considering how nice this wave fell. Just perfectly, candle after candle after candle. This is not going to last. This trend is going to become exhausted, and that's what the TD sequential is all about. It's about letting you know when a trend becomes exhausted. Now, if you use that with Elliot wave, if you use that alongside other aspects, it'll give you a much more broader scope of the risk and the probability. So my assessment of this right here is sort of like how it fell here. You can see this candle right there. So that's a number 8 right here. We didn't make it to a 9, but you can see this 7 looks an awful lot like this 7 here. The way it basically, the 7 is what called the bottom here. Let's take a closer look. So that's why I'm actually liking what I'm seeing here, because the 3-day chart, let me just, before I show you that, let me zoom out here. You can see this 9 right here was pretty good, but look how long it took for that 9 to be activated. That's what I'm saying. That's why I don't want to give you the wrong impression, like, hey, this thing's gonna, we have a 9 buy, so I'm gonna buy, and if it doesn't go up tomorrow, then it was a failed signal. No, this was a 9 buy, but look at this. Let me show you here. We actually, and look at the, wow, look at this. We had a 7. It's the same thing. Look at the 7 is actually what called the bottom here. Then we had a consolidating 8 or a retracement, and then a 9. So that sequence is actually playing out exactly right now, right? So take a mental screenshot of that 7, that 8, and that 9, and you can see it's basically kind of the same thing, where the 7 is actually the bottom. And if you don't know what TD sequential is, it's basically just, like I said, an exhausted, it lets you know when the trend is becoming exhausted in either direction. Now, it can either mean a reversal or a dead cat bounce. Usually it's on the higher time frames, especially the daily and higher. Usually, if it's not in an Elliott wave sequence, like an impulse wave, it's most of the time it could be a reversal. Now sometimes you'll get 2 9s in a row if you're in a mega bull season or a mega bear market. But during these times where the waves are pretty, they're matching up pretty nicely, they usually signal reversal. So, but you can see this 9 right here. Same thing that's going on now. But look what happened. Right after we had the 9, we actually pulled all the way back. It actually took a long time. 1, 2, 3, 4, 5, 6, 7, 7 candles to another low right here, and then we had an additional, 10 or 15 candles here before we actually broke out and activated the 9. So you can see this 9 printed these red dots, and what's interesting is those red dots, the fact that this candle printed these red dots here, seeing the candles, use the red dots acting as resistance, as soon as we broke out of them, that's when it really started to accelerate. So, for example, the red dot could have been right here. The 9 could have been here. And if we would have broken out of it, it would have never really activated. So it's just kind of interesting how this indicator works and how these red dots that got printed, basically your resistance here, for this 9 to be activated comes about. It's interesting. But you can see it doesn't always work out. Like this 9 here was a failed signal, right? You see, it wasn't a perfected 9. It wasn't going down in an orderly fashion as well. See this? You have this big sideways consolidation here, which basically took a lot of the trend out. So I wouldn't have really trusted that 9. It is coming off of a 3-wave shape, so that it could have been a little bit, you have this impulse and then a 3-wave pullback, and then you had a 9. It looked actually decent. However, we didn't have 5 waves in here. So, we had 1, 2, 1, 2, 3, 4, 5. That was only a 3-wave move there. But most of the time it's been, calling it pretty well. I mean, you can see back up here, it called the top very nicely. Actually, basically the all-time high here, or the local high here. It called this area as well. It called the top of the first wave. Now you could say, well, it didn't call the top. That's because, well, it didn't know this, but this was actually a correction right here. So this was A, and then you come up 1, 2, 3, that's B, and then this is a C. This is a running flat. So you had an A, B, C. So the 9 actually did the job, but this B wave was a trap, and it took out the top here, right? And then it came back down. And you could see the 9, again, printed those red dots, and even though the price broke above them, right, it still acted as strong resistance because it had to come back underneath the red dots and reset itself. So once again, where this 9 was placed was very interesting. Now the 9 could have been where this candle was, but then the red dots would have been underneath, and it wouldn't have really made sense. And then you also have this 9 over here, which was actually pretty good. It was coming down in an orderly fashion, had a little bit of a pullback, but the 9 finished it off and made, that final push to the downside. It printed the red dots right here. We had, a couple candle consolidation, and then we broke out. So it took, this is a 3-day chart, so 3, 6, 9 days, right? So 3 candles is 9 days. So that's what I'm saying. It could take some time before that occurs. You can see here was a 9 sell, came back down. Now this one wasn't a good one here, and I wouldn't have liked it either, because this 9 is coming in after breaking this support here, right? You can see some of the 9s. This is in the bear market, by the way. This is actually the bear market. Let me put the other chart up. So we have more data. This 9 here, it called a bounce, which was good. And this 9 here, they're common, but they're not that common. This 9 here called a really good top right here. We pulled back, right? So the 9 buy was not a good one. So when you get 9 buys, and you have to understand, if you're in a bear market, then and you're breaking support, then it's really not to be trusted so much, unless you're just doing it for a quick trade in and out. But in a bull market, it actually works really, really well. I mean, you can see all of these 9s pretty much did their job to some extent, especially the last 3 here. We came up, we had a 9, it popped the high, came back down. So it was pretty good. But this one right here was actually flawless. It came up, had a 9, printed the red dots, boom, broke out, activated it. Now it activated a 9. When I say activate, it's usually the 9 buy. But that's what I'm saying, you have to understand where you're at. If you're in a bull cycle, if you're in a retracement, if you're in some kind of Wyckoff pattern, or if you're in a markup phase, you know, in this case it was a bull market, right? So we had the red dot here, and we broke above, which sort of activated another sequence, and then we came all the way back up, and we had another 9, which actually called the top again, and then we pulled back, and then boom, we broke above the red dots again. We came back and we back tested the red dots, and then we came all the way up, and we made another 9, which printed the red dots, and this one was basically the signal to get out. So we actually had a 9 buy here down by C19, which kicked off 1, 2, 3, 4, 5, 9 sells, right? Because they're red, so that means you want to sell. Now, when you have a 9 sell, that doesn't mean you want to sell, right? That just means, hey, be cautious here. So, but if you get 1, 2, 3, 4, 5 9s in a row, then and you've already gone up thousands of percents, and you haven't back tested the bull market support band, and you have 5 waves too, right? You got to count the waves, so you get 1, 2, 3, 4, and 5. So that's why I like to, again, use it with Elliot waves, so that we can kind of see where these 9s are popping up. Is the 9 coming in at the top of the 3rd wave? Is a 9 buy coming in at the bottom of a 4th wave? Or is a 9 buy coming in at, the tip or the middle of a bear market, right? So using it in, alongside with Elliot wave is a very helpful tool. So anyway, I just kind of wanted to show us the history of the 3-day 9. So that's why I'm using the 3-day chart. It's been very significant over the bull market, right? This bull market here had a very significant, accuracy in the 3-day chart. If I bump that down to the 2-day chart, we're probably going to get more 9s, but let's see here. I haven't even checked myself. So you can see the 9s they're still in decent positions, but they're not as clean as the other one, as the 3-day, right? So if I bump that up to, or let's say I bump that up to like a 5-day chart, let's see what we look at now. So again, the 9s are placed nicely. This 9 was good, this 9 was good, this 9 was okay, but didn't call the top of this wave here. We still had quite a bit of 9s in there. Let's see the weekly chart. Now the weekly chart is a big one, right? So I actually like this 9 here. It wasn't perfect, but it kind of let you know. So for example, if you have a pretty significant run up here, right, and you have this 8 candle, you know that the 9 is coming after number 8, right? Because we can all count on our fingers and toes, right? We know that the 9 is coming after this candle is printed. So if you see an 8 candle with a big red topping tail following an engulfing 7, then you know that it's probably going to be a time to get out or take your profit, right? And then what you do is you let it consolidate. It'll come back down, and then you can see this candle here said, you know what, I'm done going down. You can see it's kind of a doji candle, and then you get flat here. So look at this. You had 1, 2, 3 candles of flatness, basically building a base. So then you could have, took your profit here on this 8, seeing this close, and then waited, and now you can see, okay, but we're still only in wave 1 here, right? Because if we knew this was a bull market, which obviously it was, then we want to ride this bull market. But if if you're also like me, a 90% hodl, 10% trade, if I'm 10% trading, I want to get in and get out so I can make some money and sort of build that position by taking profits and buying in cheaper, right? So this would have been a good area here, right? And then we come back up. Look at this. We had another 9, but we also had an 8 that was a doji, So that would have been a good area to take some profit here. So on that doji close was about 49 cents. We ended up dipping all the way down to about 37 cents. So that was a pretty, you might look at it and go, that wasn't a good call, but it actually was. If I take it from the top here and to the bottom, that's actually a 30 or a 27% move. That's a huge move, right? Especially if you have, you're using 3x leverage or 5x leverage, or some people use 10x or even 100x is insane, depending on the time frame. But 27 times 5x, that's a pretty big number there to capitalize on, right? So the weekly chart. So put it for me, the stock market is good with like the higher time frames, like the 2-week chart, the 1-week chart, the monthly chart. Crypto, it moves a lot faster. Especially the altcoins, they move very fast. So Bitcoin might be good on the weekly because it moves a little bit slower. But what I find is good is like maybe the 4-hour or the 8-hour for entries on the nines. But then also like the daily and the 3-day chart, right? So let me go back to the 3-day. But before I do that, I just wanted to point out the weekly 9. So here's another thing too. You can have 9s on top of 9s. For example, we had a weekly 9, which is the ultimate 9 you can get. So we had a 5-wave move. We've already had 1, 2, 3, 4 9s in a row, right? So this is like screaming at you, red alert, red alert, red alert, take your profit because you don't want to push your luck too far, right? So we had a 9 sell on the weekly right at the very top of this bull market, which pinpoint nailed the top, I would say. Very, very close. So you have a weekly 9, and then you go to the 3-day chart, right? You go to the 3-day chart, and then you also have a 9 right where the weekly 9 should be. So not only you have a 3-day 9, right? And then this video is more so like kind of a lesson here in TD sequential, basically going based off my experience and how I've used it, right? So and now we'll get into the price in a minute, but again, we had a 3-day 9 that called the top and a weekly 9 that called the top. So that right there says, you know what, we have 2 9s on 2 different time frames at the top of a 5th wave in the height of a bear market, right? And then what is Bitcoin doing at that time? And then this is, why am I saying this? Because we're going to need this valuable information as we embark into our bull run, right? When is that going to be? That's still yet to be determined. But eventually we will, mark my words, eventually we will get a bull run. I mean, obviously, crypto is very young. We still have regulations to get through. We still have the utility age, right? I mean, it's still very new, and this market is primed for a macro upswing. I mean, we barely got an Ethereum ETF, right? So think about 5-10 years down the line, it's going to be a much different world, I would imagine. But let me put up Bitcoin here. You can see what Bitcoin was doing during that time. So I'm going to put the 9 actually right here. So you can see the top of the chart is Bitcoin. Actually, let me do this here. So here's your 9, and then here's the top. So you can start to see we're making 3 drives to the high. So you come up, you make a high, you come up, you make a slightly higher high, you come back down, you make a slightly higher high. That's 3 drives to a high. And you have bearish divergence here on the chart. So that's what I'm saying. This is kind of like a lesson here of how I would have conquered the top of this bull market here. And so I was taking a good amount of profits here on crypto, and especially when we started getting these divergences, I actually waited to see how Bitcoin, because we had a 9 actually as Bitcoin pulled back. So I wanted to wait and see. So we actually came up, we took the high, but then we had this bearish engulfing candle that brought us right back down. So that at that moment, that was right here on this candle. So then that's where I'm like, okay, you know what? I gotta step aside here a little bit. So I took more profits. We also had a doji here. So because when you're in the middle of a bull market, it's easy to say, yeah, I'll do this and I'll do that and I'll do this. But when you're actually feeling it, you can feel. That's why you have to master those emotions and that psychological pressure that you feel to not sell, because you're making money. You're making money every week. Everybody's bullish. Everybody's making. Everybody's in a good mood, right? It's like a party and you don't want it to stop. You don't want it to end, but deep down that it's going to end at some point. And when you have these big rallies here and then back and then here and then back and then you have another one and then back and then you're pumping, it seems like you're Superman, you're unstoppable. So when you get to this 9, you kind of don't want to believe it. You're like, no, it can't be over yet, right? Even though it's been going on a while. So you kind of get complacent, and I did as well. And, I'm like, well, maybe I can get one more pump. Maybe I can get one more, because Bitcoin looks like it needs another high. And it came up and it did make another high. But then it had a real hard time struggling here. You see, Theta likes to come up, come down, go sideways, then break out. So it breaks out, comes down, goes sideways, then breaks out. So I noticed it came up. It came down, it went sideways, but it couldn't break out. This doji candle couldn't break it out. So, right after that, I was taking profits. I did take a little bit here. I was scaling, just like how you buy the market. You're scaling into the market. You also want to scale out of the market. So I was actually, it was a while back. I can't remember exactly where. But I did take some profits on this 9. But I did re-enter some of them as we broke back above the red dot. So I basically kind of broke even there. And I can't remember where else. I'll have to go back and look. But that was, we had a great run, and that was it. And that was the time to get out. And that's basically, the kind of the back history here of Theta on the 3-day chart. And you say, well, why did I go through all of that and explain all of that? Well, because guys, we have a 3-day 9. That's what I'm saying. This is history right here. This is an historical time period, right? We have a 3-day 9, right? And look at the 9. It's actually one of the best 9s I've seen, because you know what? Hold on a minute. I just noticed something. I can't believe I just barely noticing this now. So here's guys, this is really interesting. This is the Binance chart. I can't even believe I just didn't notice this yet. So I'm kind of like lost of words right now. So we have a 3-day chart on Binance, and we actually had the 9, the previous candle. I kind of feel like an idiot. Like, how did I miss that? I think I know what happened. Sometimes when this candle was going, I think it was flipping back and forth, because depending on where the candle lands, it could have been, a green 1. Right? So sometimes you get to an 8. Let me see if I can find. Here we go. Here's an example. This is what I think happened. So you can see how this was the same candle, right? We had an 8, and then this was supposed to be the 9, and it could have been at one time a 9, right? Like when it opened up, it could have been a 9, but then where it closed, it could have closed higher than the previous candle, which would have landed it on a 1. Right? It would have flipped the count. So I think that's what happened. Because you're saying, well, what are you talking about? Well, because look, when I go back to the other theta chart, let me see, where's it at here? The 9 is actually right here. So this is the Bybit chart. Oh, okay, because this is USDT and this is USD. So there's slight, and that's the thing. It's very sensitive on where it closed. So let's see here. Okay, so let's do a little bit of diagnosis here. So I got two charts side by side. I'm going to take a screenshot here so I can get some color. Okay, so let's see what happened here. So you can see, it's kind of hard to see, but we have a 9 here, right? So actually this chart is on a 9 on the current candle, but this chart, this is actually a good thing, right? This is not a bad thing. This is actually a good thing. Why? Because now, right, the Binance chart is actually a perfected 9. It's actually perfected, right? Remember, I tweeted out yesterday that, we still have 3 days on the close. So it'll be interesting to see how that progresses. So these were the same. We had a 1, 2, 3, 4. Okay, so what happened was right here. Here's the anomaly right here. So that number 4 and the number 1. So what happened was on the Bybit chart, let me see if I can zoom in. Okay. On the Bybit chart, we came up and the 4 actually it wasn't flipped, right? It had a topping tail, right? But it didn't, I don't think it closed above the 3, right? And it could have been off by a couple pennies, right? That's how small it could have been. This chart, you could see, okay, the 1 is actually closed below the 3 here, right? Which then flipped the count. Because it's kind of funny because yesterday I wasn't looking at the Binance chart. And you can say, well, why not? How come you're looking at the other chart? Because when you zoom in on the smaller time frames, like the 1 hour or the 15-minute chart, right? It's the wave, the candles are a lot more crisp. They're a lot more clean, right? There's no gaps in them. It's easier to read, right? Because it's a perpetual, right? It's a futures contract, which means the future contract charts have better precision on the smaller time frames. That's why I use it more so when looking at charts. But when I look at the macro chart, I like to look at the Binance chart, right? Because that has the most history. But again, when I want to look at the smaller time frames, I look at the Bybit chart. So that's why I didn't realize, when I was looking at the Bybit chart, that the 9 the 9 was already printed on the Binance chart. So this is actually a good thing. But yeah, let's go back down here to the Binance chart. Yeah, so this is how the way it should have been. So if I had to say which one's the correct one, I would say the Binance chart is the more correct one because, yesterday's video, I was saying the 9 should have been where the 8 candle was. I don't know if you remember that, but I was saying, yeah, the 9 should have been right here because this 4 should have been underneath the 3. And it was, but it didn't quite close below, which didn't flip the count. So, but anyway, we got that figured out. So let's get back to it. There we go. So this is the chart. This is the good chart. So this is actually, I'm glad I caught this, but because this is actually better than I previously was talking about on yesterday's video. The reason why is because you have the 9, right? The body of the bottom of the 9 is in the same area as the body of the 8, which means it's coming, the order block on the bottom here is coming in at the bottom. So that's where you want the 9. You want the 9 at the lowest point, just like how you want the 9 at the highest point when you're talking about a 9 cell. So this is actually good news here. So again, same thing back over here. You had this 7 here, right? And then you had the green 8, right? You could have got a 9, but it actually flipped the count. So, yeah, I just wanted to take this time and do a quick video, about the history of the 3-day 9 on the theta chart. Now in here it could get a little sloppy because you're in a range. So that's another thing I wanted to say. Like if you're in a trend, the 9s are your best friend. But if you're in a sideways consolidation base, then you don't really want to use the 9s. You're going to more so want to use the 9s on the smaller time frames, right? Just like when you're in a bear market, the 9s did pretty decent at calling the buys in here, like this one here, or the rallies, the dead cat bounce rallies, right? So here's a dead cat bounce rally. Here's another dead cat bounce rally. But you more so want to use on the range on the smaller time frames. So now that we're trending again, or at least somewhat trending, right? We came up, we had a 9, we had a pullback. We came up, we had a perfect 9, we had a pullback. So we haven't had a 9 buy since going all the way back here last August. So it's been about almost a year since we've had a 3-day 9, which is very significant here. And again, the 3-day 9 is coming in an orderly fashion. It's coming in at the bottom of the A. So we'll see if this 9 turns out to be a good one or if it turns out to be a bad one, right? The way we know if it's a bad one is like this one over here, we could have thought it was a bad one, right? But it was actually not, because, give it enough time and then you can start to see a pattern emerge, right? So what I can do is, take a bars pattern here just to give us a little visual representation of how long this could potentially take, right? So if we're landing here, you can say, okay, we had a 9 buy in June, and then a month later everybody forgot about it. Yeah, it's kind of boring, whatever. But then we came back up, we came back down, right? Here's the red dots. So the red dots on this one is actually already printed. So now we know where the red dots are, which is exactly at $1.60. So that's going to be our big resistance moving forward. So what we actually want is a base to be formed kind of like this one, maybe not so big. I wouldn't mind it being a little bit smaller like this, right? But something in here that can consolidate the red dots, because the more red dots you get, like for example, we had quite a bit of red dots here, which offered a big push to the upside. Same thing here. Let's see if I can find any other examples. This one, you didn't have so much of a base. You had a 9, but you didn't have a lot of consolidation. But it still led to a good rally. But it ultimately failed because we were still in that range. But essentially, we want to see some kind of bottoming formation get held in here. Now, that doesn't mean we can't have a slightly lower low. Remember, this is the 3-day chart. We can still have like a wick to the downside. So if these candles continue to go sideways here and build a base, that's actually a good thing. But you can see this little example here. You could have a wick. See how it wicked to the downside? But the candles are staying nice and flat. You could have another candle here, but a quick wick to the downside. So it's going to feel like, oh man, we have another low. The 9 didn't work out, but you got to be patient, especially with the 3-day chart. So, when I put it like this, we can still come back down to the downside and retest some of these lows in here. And that's where, we're using the 9, but we're also using Elliot wave as well. So one of the things talked about with Elliot wave is 1, 2. This could be 3, 4, 5, or this could be actually, let me make it a little bit bigger here. This whole thing could be 1, 2. This whole thing could be 3. This is 4, and then we still need 5. And then one of the things we talked about is bullish divergence. So, you know, the 9 is letting us know, hey, we're getting close. We're at the vicinity of the bottom, but it doesn't mean it could be the exact bottom, especially when you have a higher time frame 9, like the 3-day. So let's be patient, allow it some time. If we do come down and take out this low, right, we have the RSI here. We could get bullish divergence where we make a low, higher low, right, where the price has a low and a lower low. And if we come down here and we wick down here, that's going to be a really good buy, because not only we're going to have a 3-day 9, right, but we're also going to have bullish divergence between the 4th and the 5th. So, you know, save some cash, not financial advice. I could be totally wrong. This could be a failed signal and we can go down, 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 down. But you know what? It's, you know, history says that that's probably not going to happen. We could probably have more downside, a 5th wave. But if we get too far extended away from this 3-day 9, I will definitely let everybody know. The only way I can see that happening is if Bitcoin blows right below the bull market support band, crushing below, you know, 61K. If we start breaking below, you know, 62, 61K, and theta, you know, comes down for another low, but it keeps pushing lower, then obviously, right, we're going to have to reevaluate that situation, because it's really going to rest on Bitcoin's hands here. The way Bitcoin's moving down, sort of methodically and just really cruising here. So we really want to see some kind of reaction in here. Maybe like a quick move to the downside, like a big impulsive candle, then a wick that gets bought right back up, and then start building a base in here. Something like that. That would be nice to see. And then that would coincide with, you know, theta as well going sideways, because, you know, we're right at this pivotal area of where the bull market support band is. I mean, that's why, you know, that's why you want to pick the time frames that actually work. Like, for example, the 12-hour time frames hasn't been working that good. We had a 9 buy here, didn't work out. We had another 9 buy here, but it was in the process of this whole wave here, right? So now we know it was a 5-wave move. It doesn't make sense to look at the 12-hour. So it's like, well, what time frame do you look at? Well, the best way to do it is, you know, go through a couple time frames and see which one has the best luck with those 9s, right? So, you know, this one was actually pretty decent here. You came up, you had a 9 sell, or actually you had a 9 buy. You came up, you had a 9 sell. You came back down, you had another 9 buy, and then you came back up. So that was a good little range in there to follow. Now, if you want this indicator, it's actually this one at the top, but you know, you can't search for it anymore. I'm not sure why, if it's trademarked, or I'm not sure if because I was grandfathered in, but there's a lot of TD Sequential out there. Just type in your indicators right here. Type in trend reversal predictor, and it's similar. You're gonna have to edit it and play with it a little bit, but it's definitely similar to what we have here. It took me a lot of time to find that indicator. A lot of people were searching for it, saying, hey, I can't find it, I can't find it. I wasn't understanding why, so I tried to look for something similar, and it's actually the exact same thing. It's just labeled a little differently. So, you know, just go to Google, type in TD Sequential. It'll tell you how to use it, how, you know, the different techniques and things like that. So hopefully this video helped out a little bit. So anyways, that'll do it. Let me just jump in the small time frame and talk about theta here on the small time frame. We actually have a 1 hour 9 buy. It's not really perfected, but it's decent. We came down in a nice orderly fashion. 1, 2, 3, 4, 5, 6, 7, 8. We had you can see the 8, green 8 flipped, and then we had a 9. And here's the red dots right here. So it kind of looks like to me that, and look where it landed, by the way. It actually landed on the green dots, right? So that was a good area here. So that these green dots were printed by the 9 that was over here. I remember that last night. I should have took some profits right here, by the way. I was kind of letting it ride to see. But it's okay. I want to see this either on a small time frame trade, taking some profits, but on the larger swing trade, right? We have 1, 2, 3, 4, 5. We have an A. This looks like a B. I mean, the B can turn into a more complex B, or it can be, you already have sort of a 3-wave shape. 1, 2, 3. So this could be some kind of a flat pattern, which would get us more upside, right? So you have 1, 2, 3, 4, 5, A, B, and then maybe we're in the middle of C here, or it's going to be a flat C, right? So I could just move this down here, something like that. But yeah, that's about it for the small time frame. Bitcoin on the small time frame is also on a 9 buy. It's not really perfected, but it's okay. But I wouldn't put any emphasis on it here because you're kind of in the middle of this wave. I'm wondering if we're going to have to come back down and revisit these lows here, and to be a bigger 3-wave shape, something like this. Some kind of a bigger 3-wave shape. Kind of like what happened over here. You can see the trend, right? Where we hooped around. Same thing here. We hooped around, and then we had this extension to the upside. Same thing here. We hooped around, and then we have this extension to the upside. So, I mean, that's kind of been the trend here. I mean, that's kind of the same thing that happened here too. We had this hoop here. It wasn't really a hoop, but then we had this extension to the upside. So I'm wondering if that's probably what we're going to get here. We'll see. And it can either come down pretty hard too, or it can kind of capitulate a little bit before finding. I would actually kind of prefer that, so that we can get maybe some divergence here and a quick move down to really hash out that bottom right in this. We have the bull market support band as well. So want to see the price react in here and get a nice bounce out of here. That's kind of what I'm looking at for Bitcoin. XRP just looks like a mess. It's very hard to read XRP right now. I mean, my best guess is we have 1, 2, 3. We have another 3 there. But I would actually say 1, 2, 3, 1, 2, and then we're getting 3 coming down. So once this finishes here, I want to see 3 or 5 up. So we have 3 down, or 3 up, 3 down, 3 up, or 5 up. So that's it on that one. The dollar, I haven't looked at the dollar. The dollar is actually the problem. I mean, that's the biggest problem in this in crypto is the dollar. If this thing starts to break out, and here's the problem, because other countries are, nobody's talking about this. I'm not sure why, but other countries are lowering their interest rates, right? So the problem with that, I said, hey, crypto is going to go down potentially because the other countries are lowering interest rates. They say, well, how so? Because when other countries are loosening and the Fed is still paused, that means the dollar is going to gain value. The DXY is going to gain value over the other currencies, right? So if one country has loose policy and another country has tighter policy, then that country's currency will be stronger, right? Because there's going to be more interest attached to it. So it'll be interesting to see if the dollar can break out. And it actually looks pretty damn bullish, if I'm not lying here, because you came up, you had a big 1-2, you had another 1-2, you have a 1-2 1-2 here. So this is like do or die here. If we, let me put the retracement up here. Yeah, we've already broken through the 702. So that's why I'm like, I don't know, man. This is worrisome here, because if the dollar breaks out, then Bitcoin's going to dump down probably to 50K. And we still have a big gap up here. I mean, you can see all this empty space up here. There's a lot of empty space up here, which means what? That means there's a lot of liquidity up here. So we've been in a tight range at the bottom. We came up, we came all the way down, we built our base at the bottom. This is looking like it could potentially come up into a retracement before coming back down, which could push, crypto pretty significantly lower. The Fed is supposed to start loosening or start cutting rates soon, so we'll see how this plays out. The Fed probably wants the dollar to break out, and then they'll start loosening. I mean, for liquidity purposes, that's the only thing I can think of. So hopefully that stays intact. Bitcoin, right? We had this fractal here. We talked about it. It could easily come back up, take out the high. If that happens, be cautious. We'll know about it. One thing that looks very bearish is the total 3. This thing looks like it wants to break it to the downside. So, that 3-day chart, it might work. I'm hoping it does, but you know what? If we have the dollar breaking out and the 3-day chart still needing another low, then to me, this is the way to do it. 1, 2, 3. This is some kind of 4, and then we get 5. So then it becomes 3, 3, 5. So A, B, C. And then we get down in here, play around a little bit, and then hopefully get the hell out of there after that beautiful ABC correction. Looking at the smaller time frame on total 3, I mean, it has that same shape like theta, where you have this move here. Theta came up and then it came down, and it's back testing, right? Total 3 barely came up and then it slammed back down. So I'm pretty I mean, it looks like this is going to be taken out, and we're probably going to have to come back down here and revisit the lows, right? The question is, do we make another low? If we do, that's okay, but we just want to make some bullish divergence here. Let's see, on a higher time frame, get rid of this, turn that on. So it's already, it is Sunday too. We have the weekly close. If this comes down here like that without taking out the low, it could create some bullish divergence. Actually, on the daily chart, we haven't yet got into oversold territory. So we still need, in order to get bullish divergence, we kind of need a bounce up here, get the RSI up, then come down, make another low, right? So that the RSI can make a higher low. So still a lot of uncertainty here. Do we have a 3-day 9? No. So we're actually on a 7, on a 3-day 7. So we're actually getting close. So maybe if we get a 9 here, right, it's going to take another 8 to about 5 days or so. 5 days plus another 3 days for the candle to close. So 6, 7, 8 days left for the actual 9 to print. So that's not too far away. It's still, we got about another week to go. But it kind of doesn't look finished here. It doesn't have that finished look. So that's the only thing that's got my eyebrows raised. Let's take a look at Theta Fuel here. So we also have a 3-day 9 on Theta Fuel as well. And it's actually a perfected 9. I mean, this is really good here. We have a 3-day chart, a perfected 9. We have these red dots here. But I did talk a lot about Theta yesterday, basically explaining, you know, this structure here, right, where you have 1, 2, 3 down. Same thing, 1, 2, 3 down. Looks like a nice fractal here. So we kind of want to see how this came down, maybe flatten out a little bit. You can see it actually, did it make another low? No, it came close. But it came up and then it came back down and made another, or it basically made a double bottom here. So I want to see something like that where you come up, maybe make another bottom, play around a little bit, and then, you know, build a base and break out. So still a lot of work to be done. There's still a lot of unknowns like the dollar and total 3. You also have Bitcoin dangling here on the bull market support band. Bitcoin is also, or no, this is total. Total is also on a 7. And Bitcoin's only on a 5. So, let's see. Do we have a 2-day chart? 2 days on a 7 on Bitcoin. So this is basically the apex. If we break this area here, then it's going to really set the course of crypto for maybe up to 6 months to a year. So it's so important that we hold this area. If we break it, then we still have one more chance at it being an ABC. If that fails, then we're going into reaccumulation, right? So reaccumulation meaning we have a rise, crash. This whole thing was not a bull market. It was a retracement. It was a trap, right? And then if this ABC works out, then great, we get another 5th wave. If it doesn't work out, then we come back down between 30 and 50K, and then we basically consolidate in reaccumulation. So we have a rise, crash, retrace, reaccumulation, sideways, breakout. So we have 2 chances, right? That's the same thing that happened over here, right? We have a rise, crash, retrace, reaccumulation. We went sideways, and then we broke out. So we might be entering this phase if we fail it, if we fail that 3-way pullback. So once again, we get right here. If we lose sort of this range in here, right? First of all, we don't want to lose it. We want to hold it, right? Because this is rise, crash, retrace, reaccumulation, sideways, and we want to break out. But if that fails, then we have an A, B, C, and then break out. If that fails, then we're going to have to go down into reaccumulation, right? Which could take another year or maybe 2 years, right? So we'll see how that plays out. But all in all, I mean, nothing's going to make me sell my HODL position, right? Trading is a different story, right? My different, you know, leverage trading, a different story. But my overall HODL position, you know, buying crypto, putting it on a ledger or a Trezor or a hard wallet or even a paper wallet, right? Cold storage, essentially, right? My cold storage crypto is never to be touched, right? Because, you know, I don't mind holding 5 years. I don't mind holding 10 years. I don't mind holding 20 years, right? This is not for me. This is for me to pass down to my kids, right? This is generational wealth. I want this wealth to last for my kids and grandkids and maybe even great grandkids, right? So you know, once you have kids, you have to stop thinking about yourself and put all of that towards your future. You know, so even if you don't have kids, you know, First of all, congratulations. You don't have to spend all the money it takes to raise kids, but also you get to focus more on yourself and think about what your 10-year-old, your 10 years from now, think about what that person is saying, right? And the best thing you can do is, in my opinion, hodl. Why? Because we have a long time for crypto to mature, right? You still, again, we barely are getting the Bitcoin and Ethereum ETF. We're barely getting a bill passed through the House. We're barely getting a new president coming up soon that's actually pro-crypto, that's actually going to, in my opinion, change the whole landscape of crypto and blockchain. We're also coming to a point where, the old central banking system, the Federal Reserve, the interest rates, right? It's attached to a Federal Reserve that's basically accountable to no one. I believe we will have a transition out of this old system and basically it being reconstructed. My prediction is that the Federal Reserve will be reconstructed in Trump's presidency. I'll say that again. I believe wholeheartedly that the Federal Reserve will be reconstructed in a way where it's either oriented around gold and silver, blockchain, whatever the case may be. But even if that never happens, it's still really early, right? It's still, we're not even in the utility age of crypto, where we're actually using crypto to better people's lives, whether it be from payments or bandwidth or even voting or even filing or whatever the case may be. So, you do what you need to do, what's best for you and your family. But at the end of the day, I can only tell you what I'm doing, and that's not touching my position, because I don't mind if the price has to come back down into reaccumulation. You have to understand, do you mind holding through that? Or, in a perfect world, you would know that's the case, and then you can sell it here and then buy back in over here. But, that is so risky, because if you do that, and let's say we only have a three-way pullback, we come up and hit the high, then you're going to be scrambling. I got to get back in, and then the market's moving away, and then we come down. So, you know what I mean? So it's best to just stay put and stay stress-free. Obviously, don't invest more than you can afford to lose. So if we do come down here, you're not stressing out or anything, right? Yes, the only part that sucks is, it takes the time, right? It takes time. It kind of sucks that we have to go through this. But at the end of the day, the time is going to pass regardless if you're in crypto or if you're out of crypto. So you might as well be in crypto. You know what I mean? So, just understand those risks. Now, if we go into another 3-year bear market, are you going to be able to handle that? I'm not saying that's going to be the case, but if we have some kind of black swan stock market crash, cataclysmic financial system breakdown, and crypto gets killed for the time being, are you going to be able to stomach through that, right? I already have a plan if that type of situation happens. Instead of me capitulating and selling everything, I'm just going to be waiting and trying to buy the dip or the crash or whatever happens. So that's what I mean. It's all coming down to a head here, and we're very close to making it or breaking it here, because this is the point of where we need to hold. If we break this, we some of the things I thought about is maybe taking 20% off the table, off my hodl position, and then just kind of let it play out. You know what I mean? Or if we break below this, maybe take 30% off and kind of wait and see. And then if we come back up, then all I have to do is re-enter that 30% in the same area, and then I wouldn't have lost anything. So these are decisions that are going to have to be made, but it's all about waiting and seeing how this is going to react in here. So anyways, that'll do it for this video. Appreciate everybody tuning in. If you can, hit that like button, hit subscribe, and leave a comment, and I will catch you guys on the next one. Cheers.